I saw an interesting video just yesterday talking about how when you use Bitcoin, you can retire much faster. You actually need a lot less money to invest than if you go through traditional means. Basically, you don't have to kill yourself to try to save and invest 40% to be able to retire early. You can actually step off the gas a little bit, enjoy life a little bit, and you can still make up for it because you're getting superior returns, which is true. That's why we invest in Bitcoin versus other assets that maybe are low but less volatile, because you get better returns. Today, I want to show you how much that matters, though. That extra return, what does it mean for your portfolio? How much sooner can you actually retire if you invest in Bitcoin versus something like the S&P 500? And of course, with Bitcoin, there's more volatility, so you are taking on more timing risk. So you have to be careful of that. But one of my favorite articles that I've ever read is the shockingly simple math of early retirement. Basically just showing, depending on what your savings rate is, so how much you save or invest versus how much you make, that tells you how long it will be until you're able to retire. And of course, they make some assumptions like what the safe withdrawal rate is, how much you'll make on your money over this time period. But basically, it's just a very simple equation. If you're able to save more of your wealth, it will take much less time to retire, not only because you'll be stacking up your assets faster, but because what you're spending naturally goes down versus what you're making. So it's great in two different ways. Now, I want to go through the numbers, how long it would take you to retire. Let's say you're able to invest 20% of your income, how soon you'll be able to retire just the S&P 500 versus Bitcoin. And of course, I generally would say that you should invest in both, especially if you have like a 401k and it's easy money. You can diversify a little bit through work and then also buy Bitcoin on the side, but you can make your own decision. Now, if you want to see more videos like this, hit subscribe, join the Telegram as well. I'm posting this video early there, so you can get access to early videos or even exclusive videos over there. Sometimes I tell people what I'm buying there. Also, if you want to trade crypto, if you're not already trading and you want to try leverage or you want a new exchange, check out the link to BYDeFi underneath the video. You can start trading in just a few minutes. We are getting very close to oversold on Bitcoin. So if you want to start trading, check that out underneath the video. There is a trading competition that just gives you free money. We constantly run these. So even if you're watching this video a couple weeks from now, most likely we are starting up a new free like giveaway competition type thing. But right now we have $25,000 you can get access to just for trading, just like you would normally do. Now, like I said earlier, this was kind of a game changer for me after getting off college when I saw this chart. Basically, if you're able to save 50% of what you make, you can retire in 17 years regardless of what you make. Why is that? Well, generally, if you make $1 million a year and you're going to spend $500,000, it's the same as if you make $100,000 a year and you spend $50,000. Your expenses versus what you make are generally, well, they are equal, right? So this is a really interesting chart. You can pause it if you want, but I wanted to see how this stacked up versus Bitcoin. So I created this little table here, basically showing if you're able to invest 20% of what you make and you get inflation adjusted returns of 7%, what does this do to your portfolio and how much do you need to retire? First year, you make $50,000 and you invest $10,000. And I'm not saying everyone can do this, but let's just go through the scenario. So that means your portfolio is $10,000. We'll say that you get 7% inflation adjusted returns on this the next year, and then you also add $10,300. So now you have $21,000, and you continue to do this. You get 3% raises a year, so you're basically just keeping up with inflation. The interesting thing is, as this happens, you're not investing any higher percentage of what you're making. You're just staying at 20%. So the amount that you need actually goes up because you're spending more each year. So you continue to invest, but inflation's working against you, and what you're spending is growing more and more. So actually, it takes a long time to invest. At 7%, it would take you 41 years. If you start at 25, 41 years, and you need about $3.4 million. So age 66. This might be a little bit disheartening to some people because you're making a lot more money. You've almost tripled your income, but your expenses have also gone up. You're still investing 20% of what you're making, and you're actually getting a pretty decent return. I'm assuming 3% inflation because the Fed just changed what their target is. But might be a little bit sad for some people that they have to work 41 years, even with investing 20% of what they're making. That's why it's really important early on to invest as much as possible. Let's say you could get like 30 or 40% for a couple of years. That would make a huge difference by the end because of all the compounding. But still, what you're spending has gone up a lot, so you need more in your portfolio to retire. Compared to at the beginning, you just needed $1 million. Now, how does this compare to Bitcoin? This is the reason why so many Bitcoiners feel like they need to turn to Bitcoin, because the government's basically robbing them with inflation and with the cost of living. There needs to be a better solution that gives you better returns. So let's say you invest the same amount, 20%, but you get returns of 15%. Inflation adjusted, this is 12%. Well, that makes a huge difference. The first year or two, it doesn't really change what you make too much. So maybe instead of $21,000, you have $21,500. But it changes your portfolio pretty quickly. These compounding gains mean that you can retire much earlier. So let's say you continue to stack, and this is, keep in mind, this is only a 15% return. We've seen an average of what, 70, well, we've seen 75% for the last year. Let's just see here. Bitcoin price 1 year ago was about $64,000. It's up 71% in the past year. So we're talking about 1/5 the returns, right? Like 1/5 over the last 5 years, we've gone up 856%. So again, we're not asking a lot from Bitcoin, just that it continues to appreciate slightly faster than the S&P 500. It's a little bit more risk on, it's scarce, that kind of thing. So we're assuming 15% instead of the average of about 50%. It would take you until you're 52 to retire, because your portfolio would grow very quickly. You can see 52 is actually where your portfolio passes, or your Bitcoin passes your amount of expenses, and it's growing faster. So you could, in theory, retire even earlier. If it wasn't too volatile, you could retire even earlier because it would grow faster than the S&P 500. So it would kind of offset, or it would allow you for a higher safe withdrawal rate. But that's the power of Bitcoin. Like, just even with not hugely much better returns, is that how you phrase that? No. But even without like a 50% return, you can retire 14 years faster. Now, some people might say, well, I want to retire much faster than this. I don't want to work 27 years. Well, we're assuming a 15% rate of return. So maybe we have closer to a 25% or 30%. Michael Saylor said we could see a 30% rate of return for the next 20 years. Well, then it would take a lot less time to be able to retire. You would be looking at maybe 13, 14 years to be able to retire. You would be 38 or 39. Keep in mind, this is with a 20% investment rate, or a 20% savings rate. Let's say for a couple of years, you could bump that up to 40. Well, then you'd be looking at less than 10 years to be able to retire. Or maybe you do what some people might be more interested in. Maybe you invest a little bit less. Instead of 20%, you let yourself live a little bit more. You invest 15%. In this case, even with the, let's say you get 20% rate of return minus 3% for inflation, 17% rate of return, you'd still be looking at retiring by about 48. So you would still be able to retire nearly 20 years earlier. But of course, this is assuming you're getting better returns. This is what you're betting on. And you're betting that Bitcoin doesn't go away completely, right? I don't think that's going to happen, but there is more risk, in my opinion, that Bitcoin has that happen versus the entire S&P 500. Let me know your thoughts on this underneath the video. I like this take. I think it's interesting. If you're someone that has a family and you want to build memories, maybe you invest a little bit more into Bitcoin. Of course, maybe it's adding a little bit of extra risk, or price risk, volatility, versus buying the S&P 500. But maybe you can retire a little bit earlier or spend just slightly more. I think most people, though, need to focus more on how much they can invest. But maybe that's because I'm a bit hardcore, right? Maybe it's because I've been focused on saving a large portion of my income for a very long time because my job is quite volatile. But let me know your thoughts. Thank you so much. Check out the link underneath the video to BY DeFi. You can also trade on BTCC and BTUNIX and Weeks and BLOFIN. There are links to those underneath the video, and I'll see you in the next one. Bye.